folks, how are we doing today? Okay, so today we're walking through the $1.1 million portfolio because we've made a variety of changes to it and new ETFs have been included. We have generated now with this template, with this portfolio, 240K in prospective income, guys. And I cannot wait to show you the ETFs I've chosen for this portfolio, guys. All right, let's jump right into it. First and foremost, should you want access to the community, should you want access to all the calculators I've done in the past, please join the Patreon, guys. It's $5 a month or $15 if you want financial coaching. I will leave a link in the comments or the description below outlining how you can join the Patreon community. So please, guys, if you want to jump in, I really do appreciate your support. And thank you to all the members that have supported thus far. Your support and your contribution goes a long way, guys. I cannot thank you enough. All right. So now we're here and track your dividends. All right. And I've set up this portfolio template, guys. This is a template, an example with a number of new ETFs, a number of new income funds, some of which are super high yield for a little bit of an experiment, and then others that are more my tried and true investments. Okay. And with this, we have planned out $1.1 million for this portfolio. The average yield on this portfolio is around 20 to 21%. And yes, this portfolio does generate 240K in income, guys. Okay. And so with this type of income, you can do what you please in terms of living on it, dripping it, or living on it, right? You can drip and reinvest a portion of it, or you can live on it, guys. Like it is up to you based on your discretion. But keep in mind that, you want to continue to drip a portion to continue to snowball the effects of the compounding snowball, the effects of yielding more distributions over time, right? These funds are not necessarily going to grow their distribution rate. They might slightly, but generally speaking, they're going to stay consistent. If it's QQQI, it's 14%. It's probably going to stay at 14% and not grow all that much. All right. And so with that, we want to be dripping into the fund a portion at least to ensure that we have larger distributions moving forward. Okay. So with this portfolio, guys, I'm going to show you guys the assets, the ETFs I've chosen, all right? And the first one I've chosen, and it's a bit offbeat, it's a bit of a different strategy here, but I wanted to go high risk, uber high risk, with a very trendy stock right now, and that is Robinhood. And I went for the Yield Max Hui, all right? That does an average distribution of 75% annually. That is super high, guys, and I know that's kind of anti my strategy, generally speaking, but this would be a short-term investment, more riding a small wave and trying to yield, great yield on the volatility that we're seeing right now and maybe jumping out of it. That's one where you can, when it comes to these ones that are super high yield, generally stay away from them unless you have, you know, um, unless you've done your due diligence and you know what you're getting yourself involved in. For me, I would be comfortable throwing a small dart at something like this, seeing how trendy it's been and seeing how it goes, right? You want to invest only what you are comfortable losing completely. And so we went with Hui. And we're also going to go with their tried and true ETF, BTCI, which is the Bitcoin high income ETF from NEOS, QQQI, which is the NASDAQ 100 high income ETF from, of course, NEOS, Tap Alpha, which is and it's T SPY, and has a great yield, and this is what it does more a zero DTE options on this one. Baggy, which is Amplify's maximum yield income ETF. I wanted to get some international exposure, and so I went Neos's NIHI, and then for a combination of growth and income, I went with GPIC, GPIQ. Okay. And for all of these, BTCI has a yield of 27%, QQQI 14%, T-SPY 14%, Baggy 31%, NIHI 9%, and GPIC 10%, guys. Okay. That all nets out to a total annual income with the invested total of 240K. This this portfolio generates 20K per month in annual dividends, annual distributions, okay? While generally speaking, being in a capital profit, okay? Being in a profit. So these assets appreciate. Now, Hui might have a lot of nav decay. Right now, it is strongly appreciating. So if we check out Hui, it actually has appreciated quite a bit, of course, riding on the wave of the Robinhood success. So Hui is one we've seen capital appreciation for. That's why I kind of like it in the short term. We've seen capital appreciation plus a great distribution with this. So that's why I like that. But the rest of them, we've seen great stable price appreciation, of course, betting on Bitcoin, even betting on the international markets for diversification, and of course, betting on the S&P 500 and the NASDAQ 100. Another great strategy with this is we have payouts all across the month. We have payouts at the beginning of the month. We have payouts at the end of the month. So you get diversified payouts throughout the way. And that's a benefit because you want to maybe pay bills at certain time periods, you want cash at certain intervals. It's kind of like getting money in the first and the 15th, making yourself a little bit of employment income. All right. Now, guys, so as I mentioned, this fund isn't going to necessarily grow their dividends. As you can see, a 0.63% dividend growth rate, but a phenomenal dividend yield of 20%. So assuming you dripped these funds, okay, back in, if you want to go with that strategy, which is a viable strategy, your starting annual income would be 240K in 10 years. Your ending annual income, assuming, all things are equal here, would be 816K for an ending value and ending balance of 6 million as well. So he'd be dripping all the way through. And you'd compound that drip to have a $6 million ending value and 816K in annual income. Of course, Hui is an outlier, and that we'll see what happens there. We might see NAV decay, we might see some variability there. So I wouldn't bet fully on that. But even the others, I think, are much more stable at giving us that consistent, maybe 14, even 20% with Bitcoin, and getting us to this end goal of 6 million in 10 years on $1 million investment plus 800K in annual income, annual distribution. So that is a sweet deal, guys. So what the power of these portfolios, yes, is something to live on today. But if you had a million, of course, not financial advice, but you had $1 million today and you were willing to drip all of that, your compounding would be insane. Insane compounding, right? Within even 3 years, guys, you'd be doing 330K in income. In 5 years, 500K in income off the initial 240K in income, right? And that's the compounding effect of this high distribution, high yielding portfolio and what it can do over time to continue to snowball your distributions and your dividends. And then you can decide, do you want to then, withdraw some at that point after 5 years, withdraw more to live on, or, of course, continue to drip to get to the end game of 6 million in 10 years and 800K in income, guys. So guys, let me know what you think. Are you looking at some of these products? Are you considering them? I'll go back to them. Are you considering BTCI, QQQI, T-SPY, maybe even Hui, Baggy, and IHIG pick? Guys, let me know in the comments below. Sub to the channel. Guys, all the best and cheers.